Hi everyone, this is Jason Garrick of Wall Street for Main Street. I'm just going to do a short video today talking about the gold and silver markets and a few articles that I've noticed and why I think the bullion banks and gold cartel are trying really hard with paper futures contracts to cap the gold price from getting to 1300 and then on to 1350, because then the momentum would knock it even higher, faster than that, faster and higher, and silver from getting to $18 to $19 and staying there. So look at the current metals prices. Gold's around 1267. Silver is at barely above 17. There's an interesting article that came out earlier in the week from Goldcore Marco Burns' website. This is citing Reuters that gold bullion imports into China via Hong Kong more than double in March. So there's a lot of evidence now of massive amounts of physical imports of gold into Hong Kong. We know from the Shanghai Gold Exchange that that's doing well as well. And the other thing is why I think we're getting a lot more manipulation. You know, this is a really interesting article. The guy here, this guest post, it doesn't say the guy's... Oh, okay, let me see here. Okay, so I can't say his last name, but he's a CFA, and he's a gold and silver fund manager. And this was posted on a value investor's website called Value Walk. Normally, they don't do a lot of technical analysis on Value Walk, but I guess he's trying to show that silver is about to crash. But I disagree with him on this. And during this article, by the way, I'll put a link for you guys to check out this article. The technical analysis is actually good, and he says that silver could go down to $9 to $10 an ounce, but a lot of the primary silver miners would be bankrupt then. Even the low-cost primary silver miners like Pan American Silver and First Majestic Silver, who have pretty good balance sheets and low-cost mines, would really struggle. They may even have to shut down mines, or they could have problems with any debt obligations. That would be catastrophic. That would definitely bankrupt a large chunk of the primary silver miners on planet Earth. And, you know, of the large amount of total silver production, about 33% is from primary silver miners. So that would cause a huge silver supply problem. But this is something that really caught my eye. So this particular section here, he's going over silver's early 2008 rally started a bit below 14 level, took place until the white metal moved above 21. Then silver declined about $5.50, and then it rallied, which turned out to be its final rally before the big plunge, about $3. Silver's early 2016 rally started a bit below 14 level, took place until the white metal moved above 21. Then silver declined about $5.50, and then it rallied, which turned out to be its final rally before the big plunge, about $3. Okay, so what have you noticed here? I think inadvertently, this gold and silver fund manager, I'm not sure if he believes in gold and silver manipulation or not, but I think inadvertently, with the price action, almost exact amount in dollar moves of the silver price in early 2008 to early 2016, that high-frequency trading algorithms have been programmed to move silver basically the exact same dollar amounts. $5.50 an ounce decline, rally $3. And then he says, that's right, the price swings are almost identical, not only in relative terms, but also in terms of the almost exact prices. So the odds of that actually happening, of that being a coincidence, what do you think the odds are of that being a coincidence in standard deviations? The really good math guys who are listeners to this podcast, the statisticians can tell me how many the odds of a standard deviation event like that, of that being a total coincidence on exact dollar amount moves 8 years apart. So it doesn't say that the gold and silver markets are manipulated, but with high-frequency trading algorithm computer programs, that would make it easier to move markets, manipulate them into the exact same dollar amounts up or down. Don't you think so? So I think inadvertently this article has proven that another of the countless examples that the paper gold and silver markets are extremely manipulated. So very interesting. I think you guys should take a look at this. And let me know what you think in the comment section. But I disagree that gold and silver are going down to $9 to $10 an ounce. If they do, it's time to start buying 100 ounce bars of physical metal, because then you're going to be able to sell them for a profit in the future. Then maybe even double your money pretty quickly on a reversal. That would be a big trade. So if silver or the paper markets did get whacked down to 13 or lower, that would be the time to add a 100-ounce bar, because a physical delivery, or 10-ounce bars, and then you could go to your coin dealer in the not too distant future after that and go and flip them later, because there's no way that the companies producing the metal can survive at those prices. We've had a bear market in silver for 6 years. We did restart a bull market briefly in late 2015, part of 2016. We've been waddling back down and going sideways or lower. But the miners over that time span since the 2011 bear market started for primary silver miners and primary gold miners, they've basically cut costs to the bone. They've been working every day since the bear market started in 2011 to come up with new ways to cut costs. And at a mine, because there's so many moving parts to the mine, there's intense capital costs and problems, there's only so many costs you can cut. You cannot cut costs infinitely. So I think the miners are running up against this. My talks with gold and silver company executives confirm this. This is why you had companies like, they were heavily criticized for this, Gold Corp going out and buying up a JV deal in Chile for a large gold mining district. And that gold mining district needs above $1,400 an ounce gold to be economic. Some say even above $1,500. And I spoke with a gold mining executive off the record, and he said, look, that's a telltale sign of the industry. New Gold tried to bring on Rainy River, which supposedly had good project economics at the current gold price, but they couldn't deliver the mine on time and on budget. And now the mine is running at a loss. And New Gold has to run it at a loss, and their stock has suffered immensely. So that's a cautionary tale of the industry. But a lot of the juniors guys that are saying that they have a gold mine that could be economic at current prices, they're not going to be economic at current prices. They may be understating their costs by more than 40% in a lot of cases. So the industry has a lot of future supply problems coming in the next couple years. We're going to have for a healthy gold and silver mining industry, we're going to have $1,400, $1,500 gold in the next couple years. And that's going to be a minimum. Just that way the miners can replace reserves. The miners cannot replace, most of primary gold miners cannot replace the majority of their gold reserves that they are mining now for producing mines at current gold prices. And it's even worse for primary silver miners. There's a decent amount of gold projects that may be economic around these levels, a little bit more than a handful. But for silver, for primary silver miners, it's even less. One junior that you should take a look at is Mag Silver. They have one of the largest primary silver miners in the world, Fresnillo, as a JV partner in Mexico. And they have a high-grade, low-cost silver mine, and they're not the main operator. But it looks like Mag Silver, as a speculative play, that might be one of the only primary silver miners that will be started in the next couple years going forward. So there's going to be major supply problems for gold and silver miners going forward. And, they've cut costs to the bone, so they're not going to go bankrupt immediately. Some of them can raise a little bit of capital here or there to buy themselves time, but they're going to struggle at current metals prices to replace reserves. It's just really not possible for them to replace reserves. So it'll be very interesting to see. The other thing I want to talk about was Bitcoin. Bitcoin is going to record highs, and that's because, guys, it's not manipulated like gold. So, I don't think the central bankers and the bullion banks and the Federal Reserve and their plunge protection team or whoever else runs all these different plunge protection teams, or the Bank of International Settlements, or whatever central planning Keynesian scumbags are manipulating the gold and silver markets, and I'm sure there's a bunch of them. They don't really care about manipulating Bitcoin, or it's too difficult for them to manipulate Bitcoin because there's not a lot of derivatives on it yet to use paper leverage to short and knock it down. So, Bitcoin is more of a free market, and Bitcoin is acting like gold should be acting right now, but gold and silver are manipulated. So there's real world consequences to this paper price manipulation for gold and silver, and that's that the miners are in immense trouble again. Some of them are in less trouble now than others, but if the company has a bad balance sheet and their costs are not quite a bit above the current metals prices, those miners are struggling. And the majority of miners do not have projects to replace reserves at current metals prices. We're going to have $25 to $30 an ounce silver in the next couple years for sure. If you go and look at almost all the future silver mines, almost all of them need at least $25 to $30 an ounce silver in order to even consider being built. Maybe even above $30 an ounce silver in many cases. And for gold miners, it's $1,400, $1,500 gold for most new potential primary gold mines. So all the low-hanging fruit is gone. The miners have cut all the costs they basically can. I mean, I guess they can always cut a little bit more costs, but all the easy costs to cut over the last 6 years there's no more costs to really cut in large percentages. So something has to change here in the near future. Maybe we can go a little bit lower in gold and silver temporarily. Maybe we can go sideways for a little bit longer, but we're going to have to go higher here in the next 2 or 3 years. It's basically guaranteed if the real economy still expects silver for investment demand, real metal for investment demand, and metal for industrial usage. Okay, guys, well, that's it for today. I hope everyone has a good weekend, and I'm going to get out of here for now. It's nice weather outside. I'm going to go enjoy my weekend and watch the NFL draft, so take care, everyone. Wall Street for Main Street needs your help. YouTube stole $7,200 from Wall Street for Main Street in annualized YouTube AdWords revenues, and they kneecapped our analytics down by more than 80% across the board since September 2016 with their new censorship algorithms to stop the rapid growth of our channel. That was money we could have used to upgrade our website, pay bills, and invest in improving our content and growing our business. Our audience of loyal listeners is all over the globe and so large now that if most or all of our listeners were to commit to donating $1 to $5 each month to our Patreon account, we could easily meet our goal on Patreon. Wall Street for Main Street also accepts one-time donations on our main wallstreetformainstreet.com website. That's WALLSTFORMAINST.com website via PayPal, Gold Money, or Bitcoin. We also accept donations of physical precious metals that can be mailed to us. Thanks to all listeners who have already made a donation, and thanks in advance to any listeners who make a future donation or contribution to the growth, improvement, and success of Wall Street for Main Street.